All right. So, uh, this is the first of many new things you're going to be seeing from me and Paulina and Manuela going into 2025. We've been working really hard. We did not take a break over the holidays. We have not taken the first few weeks off. We've been hard at work, really refining a lot of our content, refining a lot of things. So I was dead ass serious when I said I'm about to make this membership as valuable for the founding members as I possibly can going into next year. So don't want to give it all away at once. We're working towards it. What's up, John? Good to see you, Mike Stansberry. Hopefully you brought your mink coat with you. Anyways, so like I said, we're going to be doing Fridays from here on out as member presentations. All right. Really, we're doing this as a way to pull out the expertise that's in this room. I look around here and I'm like, damn, we got some pretty impressive investors and entrepreneurs here, right? So we want to give you guys an opportunity to demonstrate your expertise, but it also gives a lot of us insights into things that are really our individual sweet spots, whether that's on one side of the bar or another. So again, we'll have some speakers lined up. I've pretty much already got January, February, and we're already into March filling some of this stuff up. So it's going to be more tactical presentations, capital raising, putting together multifamily funds, land entitlements in Denver, building townhomes in Tampa, ground up self-storage facilities, right? Building stuff like that, bigger deals. Got Brad Persick, who's going to come in and he's going to talk to us about how he's exiting a $25 million plumbing business right now, going through the process of getting that valuated and how he's doing that. So maybe let me just say this. I'm assuming that this is going to be valuable to everybody, but just maybe as a quick show of hands, like, is that valuable to have more calls like this? Tactical applications of how we're applying this. Okay, great. So what I'll say is I'm going to kind of control the first 6, 8 weeks, 9 weeks sort of thing, because we're micro stepping this. We might need to adjust along the way, but the intention is to open this up, if this goes well, throughout 2025, to pretty much give everybody an opportunity to share their area of expertise, not only to provide value, but also so we can position you correctly for referrals. I want to be able to send you referral business. I want to be able to send you people call me all the time. Hey, I need to place capital. I want money to place some money. Who should I talk to? I ask them what they're looking for. I will talk a little bit about this today. I realize they're not a good fit for me. I want to know who I can send them to when they're looking for certain things in certain markets. All right. So this is all a big part of the push that we're going to be making into 2025. Now, I may have said this already, but I just want to say it again. The cost to get in this group has gone up. So the way that we're doing this now is it's an $8,000 fee for the first year, $4,000 every single year after that. Okay. Nobody in this room needs to worry about that because you guys are already in. You're good. Right. But anybody who comes in from here on out is going to pay a recurring fee. That's going to allow us to bring more coaches. That's going to cover their events and things like this. You guys will still have the opportunity to opt into all that. So if you want to be at the event, you'll end up paying a small fee, right, to cover the cost of that event like we've done in the past. If you can't make it, no big deal. You don't have to pay it. So just remember, you guys are founding members, lifetime members. That means I want to send you more business. I want to help you put deals together. So let me know how I can do that. And in fact, Manuela is going to drop a link in the chat here. That's to our member form. We need to build our directory out. I need to know what business to refer to you. Okay. So do me a favor and fill this form out. Send it back to Manuela or just complete it to Google form. You don't send it anywhere. Just submit it. Tell us, the certain information so we can build the directory out and we can do all these things. Get to that when you get to it. It's not pressing, but just get around to it when you can. I think that's all I got from an announcement perspective. So if there's nothing else or you guys don't have any questions or anything about that, I'll just jump into what I want to share today. Let's go. All right, cool. So, another thing I'm going to say is these conversations are going to be a little bit more informal. That's fine. As we bring members in to present, play your game. As you guys know, my game is not building super fancy, beautiful PowerPoints. Like, I don't want to spend my time doing that. The information's right here. I'm going to download it to you. What you're going to see is Manuela's going to take this and she's going to make it beautiful and send it out so that it's more presentable. So when you go and you do your presentations in the future, don't worry so much about the form. Okay, we'll format it. We'll make it look better and more presentable. We'll make you look like a rock star. But for now, just worry about bringing value to this conversation. That's what I want to do today. So, I don't profess to be some like, this is not my full-time job raising capital, let's just say. But I have raised quite a bit of capital. And I want to share with you some of the lessons learned, some of the things that have gone well for me. I want to start by talking about, we're going to take this playbook and put it into a PDF. There's a lot of stuff here. I'm not going to go over all this today. What I'm going to focus on is ultimately my framework that you see here. But we're going to send this out, so you don't need to take notes on it. But like, this is, I used to train my sales teams in acquisitions on the same exact framework. This is a framework I would advise using across any sale that you're doing, and it works in capital raising. Let me just walk you through this like real quick. So step one, as I say, is put your cape on. Superheroes don't leave the house without their cape on, man. Like, I see this happen all the time. People find their way into a sales conversation and they're unprepared. They're going from meeting to meeting to meeting and they're just walking in. Like, do not do that in any sale you're doing. Make sure you've really thought through. Doug Higa, what is up, my friend? Man, great to see your face. How are you? You're gonna teach this class next because I know you've raised a ton of money as well. So you give me some feedback on my techniques. The point is put your cape on. Recognize that this is a sales conversation. What I mean is sort of like get your mind into that position. All right. That's more of just setting the frame for what you're going to walk into. Now, I would say that this is a conversation. This framework is not a cold introduction. This is for someone who you've already established, let's say they're getting on this call to talk to you about capital raising. I'm going to talk about a conversation you should have before that. But this is like when you're on an actual sales call, you're talking to somebody that's someone that's potentially going to invest in your, whatever you've got. The first thing you want to do is, like I say, set the expectations for the conversation. So Steve Trang might say it like this. Today, I'm going to share you a little bit of information about my product, what I'm doing. I want to learn most especially about what you're looking for. And you're laying out sort of the ground rules for what's coming. So a lot of times when I'm putting my cape on and I'm prepping for this conversation, I'm writing down the 2 to 3 bullet points that I want to cover in that set the expectation thing. Right? These are the things I want to accomplish. I want to make sure I answer your questions. You do this you're interviewing somebody, you do this in any sales conversation. Then the idea is like, I don't like I'm not a big fan of building rapport. That to me is like, has nothing to do with it. People invest with people they like, and especially who they trust. So you don't need to like me to trust me, but it's helpful if you have both. I build trust through talking about deal snapshots, which I'll come back to. The idea is like, you're not trying to brag too much, but you should have, as I say, a few highlights. Your 5 highlights. Like this is something that I would just recommend everybody have. Stats, quick stats that you can describe who you are. I've been in the business for the last, 10 years. We've done X amount of yada, yada, yada. Like you should have bullet points like that. And it's not to be braggy, but it's to establish, like, I used to say this all the time. It's like, I'm running this meeting. I'm the expert. This is my meeting. Okay. You want to be in control of that conversation. That's my approach in sales. It's not forceful, but it's like, you want to demonstrate that I'm the authority here. I'm the authority on this topic. I'll come back to this. This is a Voss thing, calibrated what and how questions. This is really where the magic begins. And you can see that this little loop right here, this is the magic in sales and especially in capital raising. And it almost always starts with like, what are some of your investment goals? What are some of your investing goals for 2025? What, you coming up with what I used to call the daggers, the what and how daggers. When I'm prepping for a sales conversation, I'm writing down 3 what or how questions. That's like how I prep for any sales conversation, whether I'm selling people into the club, whether I'm meeting with a client that wants to hire me for a bathroom. What are you looking for in a contractor? That's what one of the questions I always ask. What kind of investments are you interested in? How are you hoping I could help you today? These types of things. Okay. Those questions just, if you can really get those questions dialed in, those daggers, you just go in a loop. So labeling, mirroring, paraphrasing, this is Voss stuff. It's just not rocket science, actually. So what are you looking for in an investment? Well, I've tried that, and you want them to elaborate. Of course, they go on and on and on and on. Okay, so it sounds like you prefer this over that. That's sounds like, seems like, feels like. That's labeling. So, okay, so it feels like we need to find something that's a little bit less risky in 2025. Or sounds like we need to take some more risk in 2025. Sounds like you're looking for some bigger upside plays. And the magical phrase is always, that's right. That's the phrase that you're looking to get. And you get that and you go back through the loop. Okay. So so it sounds like you're looking for something that's got a little bit higher upside. What options have you considered? Well, I don't really have any options. Okay, well, you get the idea, right? You're going around in this loop over and over and over. And I really think of this, I used to describe this as the sketch artist. You're trying to basically sketch what they're saying. There's a lot of solvable problem stuff that comes into this. This is really the alignment. And I have a lot of thoughts, but it's hard for me to kind of break it all into one thing. You're trying to get to their solvable problem. Like, ultimately, what return do you need to hit your goals? Tom Ferrara knows about this, right? We talk about this in just every aspect. Like, if you're going to make an investment, ideally it's helping you get closer to your goal. There's some people who have making a 10% loan is not actually going to help them get closer to their goals. So this is also a lot of weeding out. That's sort of how I do it. In fact, I've raised probably $6 million and I only have like 10 clients. It's not like everybody's a good fit to invest with me. So it's just like as a doctor, you just got to deal them out to the right person. That's why it's helpful to have other people, frankly, that specialize in certain things. Just to kind of round this out. So here's how I do this. I keep going through that loop until I get that's right over and over and over. And then you summarize it. So, okay, so you're looking for something that can get you this, preferably in the Midwest, preferably in multifamily investment, yada, yada, yada. Yes, that's exactly right. Okay. In every sale, I always like to introduce some level of friction. Always. So this is where I always kind of pull away. Well, I don't know that I have anything right now. The worst thing you can do, in my opinion, when you're raising money is try to sell a deal to someone when you have a deal. Problem is, you come across as desperate. Your energy comes across not in the same way. The best way to raise money is before you have the deal. We'll go over that, how I do that. But that's where the pull away works. Well, I don't know if I have anything like that right now. Not sure I actually have anything for you right now. But let me show you how some of my other deals have worked in the past. I recommend everybody does this. You have a sheet that highlights the deals you've done. This is how I do it for my flips. Purchase price, rehab, holding costs, sales price, profit, close date. And I always include this at the end, the project details and the 3 biggest risks. This has just worked for me. And so I have all these deals, right? And I'll go through them. And really, you just show them 1 or 2, and then they're like, cool. Okay, clearly you know what you're doing. You're an authority on this. So then this is the magical closing phrase. This is like the phrase that I've used to raise more money, to all of my money. So I don't have anything at the moment. But if I did come across a deal that looked like this, what would you want me to do? It's a little awkward and it works. It's not if then. So if I came across a deal like this, how interested would you be? How quickly would you be able to, or how interested would you have in that? You know, how much interest would you have in that? What would you want me to do? That's usually the phrase I always say. And they'll be like, I don't really know what you just asked me, but they're a little confused by it. It throws a little bit of a pattern interrupt. And then I say is, okay, great. I have a framework or a process, I guess, that I call being on the lift. This is a ski reference. And I've personalized this, as you can see. I described the lift like this. It means because this is such a relationship, like I'm going to speak from my perspective. I raise money before I need it. I don't look for a deal and then go look for the money, because that puts me in a difficult position with my relationships. The wholesalers and the people that bring me my deals, the way that I get my deals, I want to make sure I can perform before I lock that up. And I tell this to the lender, because the relationships are the lifeblood of my business. I want to make sure that I have the money lined up. So what I do is I put people on the lift, which means you get on the lift, you're going up to the top. You can't jump off. It means I need to see proof of funds. I need to know that you are committed. I'm good enough with your word on the lift. But I need to know that, like, when I find a deal that looks like this, and remember, I'm the expert. Because a lot of times I don't position this as like, I'm not going to send this deal to you and say, what do you think? That's not how this works. I'm the expert. You're working with me because you trust my ability to underwrite and execute on these deals. And there's certain parameters I use to underwrite. Of course, I have a whole buy box document. I didn't even show that. Let's see, where do I find that? Buy box. So I'll show them this. I'll kind of talk through about this. But these types of documents, you're like, when I find a deal that fits these parameters, I need to know that you're in or not now. So I put them on the lift. That's the idea, because then you're in an order, right? So I'm going to place your capital next. There's an order to this. Oops, I'm showing the wrong thing. I'll send this framework out, but this isn't rocket science. This is just my general sales framework of how I talk to anybody in any sales situation. Most importantly, it's this loop right here. What are you looking for in an investment? How would you know when you found the right investment? What things have you tried? What have you invested in before? What's important to you and the person you invest with? It's just really good what and how questions that you write these things down before you get into the call. And then these are the magic phrases. If I did find a deal that looked like this, what would you want me to do? Okay, well, this is what the next steps look like. And then you explain what it means to get on the lift. Any questions, or I'm just pause for a second maybe on that? Any questions or comments?
Great job, for Paul. Keep going.
Sorry,
I don't know. Go ahead.
what was LAMP?
Labeling, mirroring, paraphrasing.
Got it. Thanks.
So that's labeling. You know, sounds like, seems like, feels like. This is all straight out of Voss's book. Mirroring is like, I mean, it's there's a lot of ways to mirror. paraphrasing is labeling and paraphrasing the ones I use the most. You're just summarizing back what you heard them say. And you're looking for, yeah, that's right. Yep, exactly. Those phrases are how I know I'm progressing through that sales conversation. You don't want to get yeses. You want to get that's right. What else?
So I guess if you don't have a ton of history in to like fall back on when you're pitching someone prior to you needing investments, what's like a good strategy? Do you fall back on deals you've done in other similar type of situations, or do you just really pitch the idea?
Yeah, let me answer that question in this next little section that I'm presenting on. I will answer that question 100%.
Okay.
Anything else? Okay, let me keep going. So, great question, Mike. And I know where you're coming from, man. I had to everybody has to start there. So a couple let me just say notes that I made initially. First of all, this is a long game. That's why I would suggest starting to raise capital before you need it. Here's how you raise capital before you have it, before you have a deal, before you have a track record. You need to come up with a sample deal if you don't have deal snapshots. If you can't show successful deals that you've done, you need to come up with a sample deal. This is how we know we found something that we're looking for. It's like aim small, miss small. That's why I can't stand when other investors or flippers in my market will just say, send me anything that's a deal. It's like, so but you don't have enough experience to know what a deal is. It's like aim small, miss small would be my point. I wish I had trying to think what that was called, but I had this old PDF that I made that was basically it broke down. It's almost like a buy box. Like these are the things that I'm looking for. If I find it and I can check these boxes, that's how we know that we've got the right deal. And it should underwrite, for example, my flips, I underwrite them to 10% of the ARV. And I explain all that. What I'll also say is, I didn't finish my thought here because I was preparing for this in the last hour before this call. Sorry. But my point is I am talking that what I just shared there is for a different conversation than the initial conversation. If you've never had a conversation with this person before, here's how that looks. For one, you have to pick up the phone and call everybody you know. And okay, let me kind of start here. First, active investors make terrible passive investors. You're not going to raise money from an active investor, or they're going to be a huge pain in your ass and you're going to want to fire them anyways. They're just too annoying. Just stay away from them. That's my advice. Now, you can create JVs, you can create other types of relationships. But if you're trying to raise money at 10% and you just want them to leave you alone, an active investor is not going to do that. Here's the short answer to your question, Mike. If you don't have the experience, get somebody on your team that does and sell their experience. I sold Nate and Hassan's experience for years. If you guys don't know Nate and Hassan, they're my two partners on the townhomes. Guess what? I don't know shit about building townhomes. I'm learning. I don't pretend to know. I don't pretend to know. The worst thing you can do is overpromise, exaggerate, and embellish. That's the worst thing you can do. It's the type of people you want to attract will see through that so fast. You have to be honest about where you are, but also be honest about what you're doing to prevent bad things from happening. I don't know anything about building townhomes, but I'm working with two guys that have built over 300 units in the last 10 years here in Denver. This is what they've done for the last 10 years. Deal triangle stuff, right? When we talk about the deal triangle, I did not know how to operate. I did not know how to find actually the townhome deals that we've done. I haven't found any of them. All I knew how to do was connect with people who wanted to place capital. So just say that. I think the biggest and best thing you can do is being honest in these capital raising conversations. And then we go through a few other things. So you need a sample deal. You need a document of some kind. You got to get out of just trying to explain it. You need to have something that's physical that you can send them that says, this is what I'm looking for. And when I find it, this is how I'll know that it's what I'm looking for. The same way I talked, this is a service. I mean, you got to know your client. It goes back to not everybody is a good fit to send you money. They're just not. I've raised a decent bit of money from, I spent almost 10 years in corporate sales. So I was on a plane Monday through Thursday every week. I was younger than most of the guys I worked with. Most of them were in their late 30s, early 40s. They had young families. They did not have time to invest. So I found that I had a lot in common with those people. I really understood their needs. I really understood what they were looking for. I knew that every single one of them has money sitting in a 401k that they didn't roll over from the previous job that they had. Because I had that. Because I wasn't thinking about that. Not really. Because you're just trying to make money. You're in this sales game. It's a whole thing. So that was a really powerful client for me to work with because I knew exactly who they were. I knew their problems. What I would recommend is the same thing we talk about in all services. Get to know your client, get to know the needs of those people and aim small. Like an engineering sales person, I know everything there is to know about that person because I was that person. So my recommendation is also to really get to know who your ideal client is and who, just as importantly, who it's not. And then, as I say, pick up the sniper rifle. Like, this is the truth right here. I would even say it's not 80-20. Like 80% of my investors, yes, definitely 20% of my investors account for 80% of the capital that I raise. But I would go even one step further and say it's actually the top one lender that I have accounts for 95% of the money that I raise. That is true. That is true. That is true. That is true. Put it in stone. This is, for every little fish that's going to bitch and moan about $100,000 and ask you a million questions, there's a lender who will write $1 million check without thinking twice. The Myers. Okay, lesson learned. It's always the farmers. My biggest lender is a family I baled hay for in high school. Okay, I've known them for forever. Had no idea that their family is probably worth $250 million. $250 million with a B, big B. They sold some businesses. You'd never know it. You'd never know it. It's the unassuming. It's the guys who are spitting dip wearing overalls, oftentimes, who have the money. So pick up the phone and call everybody you know. And it's not about hitting them up for money. It's like the conversation goes like this. Hey, just wanted to let you know. First of all, wanted to see how you were. When you call someone you haven't talked to in 20 years, that can be a little awkward. Remember, this is a popularity contest. If you don't know that already, let me tell it to you. Business and capital raising and deals, this is a popularity contest. People do business with people they like. Just as simple as that. So be likable. It's okay to call your uncle up. You're not hitting them up for money. It's okay to call that family friend. It's okay to call these people and just tell them, hey, I didn't know if you know this, but I'm in real estate now. I'm looking at a bunch of, it seems like I've got more good deals than I have money for. If you know anybody who's interested in real estate, would you be willing to send them over to me? I'd love to have a conversation with them. That's how it goes. That's it. It's as simple as that. You're not pitching deals. You never, ever, ever sell a deal on your first call with somebody. That's the worst positioning you can possibly be in. That's why I say don't raise money You raise money before you have a deal, not after. You can't call that person you never talked to in forever and hit them up. It just feels salesy. So even if you literally have a deal on your desk that you're desperately trying to fund, if that's the first time you've talked to them about capital raising, do not pitch your deal. It's just, this is a long game. You have to think about it that way. And because it comes across really salesy. I've never raised money from anyone I've ever pitched a deal to on the first deal. Ever. Maybe you have, maybe you disagree. I'm just saying this is my experience. So pick up the sniper rifle. We're working on this document called Relationship Capital. It looks like this. Where is it? So the idea here is like, some of you have probably seen this already, but sometimes it's not picking up the phone and calling the person you think that could raise money. You could raise money from. Sometimes it's calling someone who might be able to connect you with people who could raise money from. So this is a sheet that kind of will help us collect all of our most valuable relationships, people that you know really well that would be champions for you. Pick up the phone and call them. You know anybody who might be interested in investing in real estate? I'm working on a few things. It's that simple. Don't come across trying to pitch on that first conversation. Make a touch point. Again, I'm just telling you how I do it. Not saying that this is all exactly the right way to do it. It's just how I do it. So then you need an example of your expertise. You want to see mine? This helps me raise money. Like this is just such a powerful document. This is a document we make for every fix and flip or development we do. This is a 79-page document. Okay. It includes the project overview. So here's the scope of work that we're doing. Here's all the people involved. This is the partnership I have with Bree in Boston. Here's all the site plans, the changes that we're making, the walls that are moving. Here's all the mechanical drawings. Here's the electrical schematics and layouts. This is the plumbing. Right? We go through, okay, here's all the utilities. Here's all the design boards. Someone sees this and they're like, holy shit, you guys are dialed in. So we haven't finished this one. Not quite done with all of the design boards. But again, you can see the level of detail that's in here. Okay, here's the exterior rendering with the specifics that we're using. Here's the project schedule, so our milestone dates. You know, here's the schedule broken down by individual line item. Here's the pro forma. Oh yeah, it's a nice, you know, little payday there. We want that to be over 10%. This one's around 13.5. We're in a good shape. Here's all the proposals. Here's all the scopes of work. Let's see, our sign-off docs and our contracts with everyone that's involved. It's like, oh my God, somebody sees this. I'm happy to send this to you as well. It's sale made. Like, they do not question my authority in the subject. I'm running this meeting. Okay? We're not trying to be dicks, but this isn't like, I am the authority here. This is what I'm trying to say without saying it. I don't need to say it. They see it and they're like, okay, this is an example of your expertise, Paul. We can tell you guys are dialed in from an operational perspective. That's what I would recommend. You finding some way to demonstrate your expertise. And it's not by saying, look how smart we are and look how much money we made on our deal. It's like, no, this is find something like that. I can't say I put enough thought into how you might do this in a different business. I just know how I do it in mine. And then lastly, raise the money before you need it. Otherwise, you come across as desperate. I'm telling you, it's a bad position to be in. If you have a deal and you're trying to raise money, I like to get the commitment. If I find something like this, how quickly would you be able to get your money over to the title company? Right? You're teeing it up before you get it. That's what's worked for me. Now, let me go for a few lessons learned here. Again, active investors make bad passive investors. Just do yourself a favor and stay away from active investors if you're looking to raise money at 10%. Now, there's different I'm sure there's a million caveats to that. But in general, I've never raised money from an active investor through a private note. Not really. With the caveat that oftentimes people get to a level in their business where they kind of downshift away from active investing into passive investing. So maybe they were active investors and now they're doing more passive. Typically, these guys have gray hair. Let's just say it like it is. You're not finding a lot of 20 and 30-year-olds making these loans, right? They're 50s, they're 60s. They've been flipping and developing for a long time. They're sitting on a handful of $1 million. And yeah, they're downshifting and they're making these loans. That's great. Those are great fits. But I think you get my point.
Paul, can I interject real quick?
Yes, sir.
While we're on this subject of the type of investor, I think it's prudent to bring up a new type of investor that has hit the scene in the past couple of years, and that's what is called the gator lender. If you don't mind. So guys, a certain somebody created a gator lending program, which is essentially short-term lending at very high interest rates, where it's essentially putting two desperate people together to make a deal work. Just be aware that, if you are talking to an investor that maybe you met them online or Facebook or something like that, find out what their length of term is, what they're comfortable with. If they're saying that they want to be, 1 month, 3 months, or they want to just do, earnest money deposit, just run, just stay away. That person's inexperienced. They're just trying to throw their money out to make a quick penny. So I thought I would bring that up because whenever I make a post about on my social media, I get a lot of gator lenders that are just looking to put money out to make like a 50% return in 30 days. So just being aware of that.
That's like laughable and almost like not even worth mentioning in my perspective, because it's just so ridiculous, Jeremy, that gator lending bullshit to me is just so silly. I'm not saying that it's not like, not saying you can't make money from that, but I couldn't agree more. If you're talking with somebody like that, they are predatory in most cases. Just stay away. In general. So that initial conversation, again, you're not pitching anything. You're just establishing like, this is what I'm doing. If you know anybody that's interested in real estate investing, would you mind sending them to me? Make that ask. But don't pitch them a deal. Even if you have one, don't pitch it to them. It doesn't work. I say it's always the farmers. What I really mean by that is like the people who you least expect oftentimes have the most money. Okay. That's my experience. If you don't ask, you can't raise it. So if there's a certain bit of like, this takes some stones here, folks, right? You got to get out of your comfort zone and you got to ask people uncomfortable questions. And it's just part of the game. So getting used to asking it, saying it in a way where you're not coming across as desperate. You're not coming across as, I'm not asking for money. I'm asking if you know anybody who's interested in real estate. Again, recognize that like, it's hard to find good people to place cash with. It really is, right? So they're not doing you a favor necessarily, right? This is a mutual exchange of value. So be careful offering too much. It makes you look weak. It's my opinion. I don't really, if somebody starts talking about we're offering like 20+% return, it makes me feel the ick personally. It just gives me the ick. I'm like, you're weak. You're coming across like your deal is weak. Your ability to negotiate is weak. Frankly, the more you're paying out, the more risk you have in your deal. I mean, you're strangling the deal when you do that. Like if you kill the host, there is no deal. You need to make money. And if this lender is only interested in the highest return possible, thanks, but no thanks. You do not want to commoditize this. You do not, it's a race to the bottom. I see this all the time because, it's like investors, if they're inexperienced or how did I say this? They don't know any better. Let's go back to crypto for a second. Okay. You've got one farm that'll pay you 1,000% return. You got another farm that'll pay you 10% return. Which is better? My short answer is it depends. I need more information. Right? It's like risk, all these things, they factor in. So if we're only looking at investments as like which one is highest, what I'm going to suggest is that is a really dangerous position to be in. You do not want to take those people who are only interested in the highest return possible. And I'll just tell them there's plenty of people who can pay you more, but there's not a lot of people who will care as much about your money as I will. Right? So find a way to differentiate yourself. If all you're doing is competing on price, it's a race to the bottom. Mike, if you don't have the experience, get someone on your team that does. If you're building townhomes and you want to raise money for a townhome deal, call me up and put me on the OA. This is what I mean. You need a resource. Tell me what you need. Let's figure out how to get it for you. Call Mike Jones up if you're in Florida. Right? If you're in Kansas City, call Tom Farrar. This is how I do it, right? I don't make up or over exaggerate or over promise my ability to execute on it. I'm talking about the team that we've put together that is going to take care of your investment. The people that we have on the team. I sell the team. Always. Because this is not how you sell. And talking about how great your deal is and how well it's going to do is also not how you sell. I'm all for talking about expected values, but when I talk to the Myers, I don't talk to them about how great the deal is. We talk about that for about 10 seconds, and then I talk about how I'm going to protect their money, what we're going to do to make sure that the city doesn't blow up our timeline, what we're going to do to make sure that we're dialed in. We've already got the project binder started. Here's the biggest risk we found in the project. Here's what we're going to do, and we're going to handle that, yada, yada, yada. It's like goes back to literally the stuff we talk about all the time in the club. How do you plan to create asymmetry? You don't create asymmetry by talking about how to make the upside bigger necessarily. It's about how to reduce the downside, how we raise the floor in these deals. That's my focus of how I talk about deals. And then again, I have a whole thing that I don't have time to go through it all today, but I talk a lot about what Dan Nicholson gave me this phrase, preventive and detective controls. How are we going to prevent bad things from happening? And how are we going to detect them before they become a really bad problem? Because bad shit happens. And if you're just talking about rainbows and butterflies, the savvy investor is going to see right through that. You come across as young and inexperienced when you do that. That's not how people that have been in the business for a long time think. They don't think like that. So lastly, I say this is a popularity contest. Like millions of dollars are probably one call away from every single person in here. Because the people who know, like, and trust you, maybe go so far as to say even love you, will help you if you ask. I promise that. Like, so I don't mean this to sound vain in any way, but like, if you don't know that to be true, this is a relationship business. Relationships are done, or business is done through relationships. So you can always call me. You can call other people in this room, but I would recommend making that champions list, which we'll go through. Pick up the phone and call every single person you know that's in your life and tell them, hey, I'm looking to raise some money this year. If you run into anybody, have them call me. So that's what I got for today. What y'all got for me?
That was really good, Paul. Really, really good. I think one thing I was thinking about is a big mindset shift for me was that when I decided that they weren't doing me a favor, giving me money, I'm doing them a favor because I'm giving them an outsized market return that's backed by collateral. And in the worst case scenario, they win. And in the best case scenario, they win. So it took a while to have the experience, to have the confidence to have that. And you also have to have a good deal. But I think that mindset shift was really big for me.
Yeah. Agreed. It's a tough shift to make especially when you're younger. It's maybe it's imposter syndrome, right? I don't know what the right phrase is, but it's certainly a bias of some kind. You know, you're misreading the situation. You know, the reason that you're having that conversation is because they're interested in having the conversation. You know, like again, it's like toughen up is what I want to say to my younger self, Paul. Toughen up a little bit. Stop being so like, you know, in need of other people's approval, frankly. Right? Hey, if they don't want to give me money, that's cool. I'll call the next person. That's how I think about it now. Right? And frankly, it just works to put people on the lift. You raise the money before you have the deal. So like I've already got the cash lined up for my next couple fix and flips. And I tell them sometimes it takes me a month or two to find the next deal. So I need you to put that money in an account that it's ready to go, because when we have it, we got to move fast. That's what works for me. And yeah, they're not doing you some favor. This is mutually beneficial exchange of value. And it goes back to understanding the currencies, understanding their solvable problem, framing it in a way that you're allowing them to accomplish their goals. What else? Sure, everybody's got some thoughts. Looking around, I know a bunch of people have raised a lot of money in here.
Yeah, I think that getting those soft commitments at the start, you know, like you said, it gives you the confidence to go forward. So, and when I say soft commitments, you know, just like you mentioned, that start earning the money before you need it, because then you know you can commit all the way around once a deal comes. So you're committing to your wholesalers, you're committing to the people who are potential lenders. But yeah, everything you said was spot on, man. First rate.
The energy about you changes.
Yep. Exactly.
100%. When you know that I got a freaking army behind me, you can walk up and punch that deal right in the mouth, because you're like, come for me, man. I got a whole team of guys behind me. Like the confidence changes, and you're not, everything gets better because your conversation with that lender, you're positioned correctly. Then when you're having these conversations with these sellers, your job is to protect the money that you know that needs to be placed. It just changes everything. It just changes everything. And the last thing you really want to be doing, especially if you do business like me, like I haven't spent a dime in marketing to acquire a deal in years. It's all relationship based for me, 100%, which means I better fucking perform. I do not let my people down. If I tell them I'm ready for a deal and they bring it to me and it looks like that, you better believe I'm making sure it gets done. I do not leave my people hanging. So I got to know. And I explain this to my lender. The relationships are the lifeblood of my business. And so will you be if you choose to get on this lift. I'll protect your money as if it's my own. Probably better than my own, if I'm being honest. I'll waste my money like nothing else. I take other people's money and I protect it at all costs. And I don't know. I think if you're going to raise money, everybody in this room, again, that's why we screen to come into this group, high caliber, high character people. Because, man, I can't stand that. Like, it's your job to protect these people's livelihoods. And I don't take that. I take that very, very, very seriously. And I know everybody else in this room does. So, thank you, Doug. Appreciate that.
Yeah. You're always better off paying someone back on a bad deal with your money so you can run again, you know, just to keep that integrity, keep that trust, you know, and just keep that ball rolling, man, because there's always sunshine at the end of the tunnel.
Totally.
So if shit happens, take care of business and move on.
Take your lumps like a man and move on. Or a woman. I don't know.
Well, I wanted to say one more thing too. You talked about how you said 95-5, 80-20 with your investors. I do have a cautionary tale about that, which is I had one guy who was a whale. He had just sold his company for like 20 million in cash. He had no idea what to do with it. And I courted him for months, and he said, I'm ready to go. I want to fund all of your deals. Like, give me everything. Like, I want to be your guy. I then had the best month that we'd ever had, and I needed 800 grand in like a couple weeks. And he had already committed to all of it. When it came time to actually wire the funds, he backed out and ghosted. And I sat down at a kitchen table and I raised 800 grand in one day.
Wow.
Like, it did not leave. Like, just was on the phone for like 12 hours. But like, I never wanted to put myself in that situation again where I'm like, all my eggs are in one basket. I'm counting on one person, and they're like if that domino falls, then all these other dominoes falls. Not to say that that would happen with your guy, but I just, like, you have to think through the risk of what happens if this guy doesn't come through. Yeah.
Yeah, I mean, it's like it's the what do you call that? The key client risk. It's like point well made, right? If you have, there's risk associated with that. That was more of maybe me saying from an observation when I look at my own lenders. I have a handful at 100 grand, handful at 150, couple over 200, 250, and then one guy who will write $1 million checks, 2.7 million on that townhome deal. Here's 500, go play with that. Here's 400, go play with that. Like, and because we've established this rapport, they do that. And there's risk in that. I totally follow what you're saying. I agree with that. So, point taken, Paul. Figure out how to diversify your investors a little bit. Maybe go find one or two more whales, put them on the lift.
Yeah, maybe find another guy like that, so you have a backup,
What else? John Heisler, what about you? You raised a bunch of money.
Yeah, I was gonna say I've had a similar scenario to what Jake just talked about with commercial, with the kind of due diligence period, the under contract period being considerably longer. A lot of times, it does give you a longer time to raise money. So when I started, I raised money the way Paul said not to, and definitely it is way more painful and stressful to raise money when you've got an awesome deal that you really need to close. So it's definitely better to get commitments up front. I've had someone back out like Jake has. Now I try to have them wire at least part of the earnest money up front. And I've tried to have them sign different paperwork earlier, but now I just find it easier. Put a couple grand up with my closing attorney, get a little bit more committed, because you have some folks get squirrely once it's time to wire the money sometimes.
Right.
But outside of that, everything you said is spot on, man. I wish my pitch decks were as detailed as that scope thing you just showed. That's nuts. We'll get there someday.
Yeah, like I said, we don't need that level of detail. Why do I spend time to do that? Because appearances matter. Because appearances matter. And because people see that and they're like, whoa, this is crazy. You guys are dialed in. It's like, yeah, we are. So what do you want to do? If I
Probably
found
one of those
like
things,
this, what would you want to do?
yeah. You can do it one time, do it in depth, and then just kind of plug and play it over and over.
Yeah. So if you're on this call, I'm assuming it's because you're probably interested in raising money. And I've told you guys all this before, but there's a couple outlets of places I get investors from. One of them is still from Dan Nicholson. So Dan, has quite a few clients that are wealthy that need tax things. They need to buy stuff. The product that I offer, I don't do that. I don't offer depreciation. I don't offer tax benefits. I don't offer that. It's like I have a certain thing I'm looking for, and I'm looking for a certain type of lender. And like I guess what I'm trying to say is I've been kicking these lenders out to different people in the group. But I need to know from you what you're looking for. So fill out that form. Okay. If you're looking for a certain referral, tell me. We're making note of all this. We're trying to refer you business. The whole intention for the founding members really is to help you guys grow but I got to know what to help you with. So if you're trying to raise money, if you've got a deal, help me understand, okay, what does a sample deal look like? If you want some accountability around that stuff, like I have these connections I can make. I just need to know who to make them to. Okay. If you're getting started, I'm probably talking more towards like Mike and Caleb, because I know you guys are just kind of getting started or you're interested in this capital raising thing. It's just picking up the phone. Like it's not complicated. It really isn't. You just got to pick up the phone. You got to let people know what you're going to do. And if you commit to this over the next 2, 3, 4, 5 years, you'll be raising money. You don't raise money by having a deal. You raise money by building trust, telling them what you're looking for. And if I found it, what would you want to do? That's how I do it. That's where you start. Now, of course, next week I'm bringing in Nick Cooley to talk about funds at a higher level. Okay, we're going to talk about, he started and managed several multifamily funds, development, value add, all sorts of stuff like that. I'm going to bring him in and he can share his experience. I have no experience with that. So we'll talk about capital raising maybe from a more like, I don't know, structured way. I kind of still do it like a cowboy, if I'm being honest. I don't have a fund. We don't syndicate. I don't set up 506Bs, and I know all that. I know about it all. I don't do it. Nick does. And if anybody else has any desire to speak on these subjects, you feel like you have something valuable to share, maybe Doug, I'm looking at you. I know you run a fund. I know you've raised a lot of money over the years. Anybody else either that wants to share on this, feel free to reach out to Manuel and myself. And you're going to like these Friday calls. I think I'm going to try to bring a ton of just actionable value around these different areas on the triangle and just all sorts of good stuff I got coming. So, anything else, team, before we break? You guys have go off on our way for the weekend. Cool.
Thanks, Paul. It was awesome.
Thanks, y'all. Have a good weekend.
Man.
See ya. Bye.